You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan and welcome to Masters in Trading Live. Every single day we get on here at 11 o'clock. We go over the market, share a few tidbits. Today we're going to cover 4 topics. Before I get into the topics, yesterday we had our advanced notice kickoff party. What an absolute blast. We had 300 people live. It was so much fun. We went, and on the kickoff party, we went over yesterday's, in the last couple of days, names that have the most unusual trading activity. A couple of questions came up, so we'll go over those questions today. So the 4 topics we're going to go over. For one, we're going to talk about lockups. We talk about lockups. I got an awesome lockup trade to go over. We're going to go over 5 tickers. So get ready, 5 tickers we're going to go over. Secret weapon of all traders. Really easy to use. And then finally, this was the most asked question on our live last night in our kickoff party. So I want to go over an MGNX example. Let's go over to the screen. Let's go have some fun. All right, here we go. Advanced notice. Just give me a second here while we're switching screens here. Screen share. One sec, guys. Just having a little bit of trouble turning my screen. What's up, everybody? One moment, please. There we go. All right, here we go. Let's see how that works. I think we're good. With all that trouble, I'm going to hop on, and I want to start here because options education. I believe education is a commodity, really, okay? It's available for every single person. It's so cool that you can learn on the internet. So I want to tell you, great options book. Options is a strategic investment. Buy it on Amazon, okay? If you want to learn vertical spreads, calls, puts, keep this by your desk. It's an academic resource. It's an excellent, excellent book. I do like to pride myself on you can learn about calls and puts anywhere on the internet. Buy a book. I'm going to teach you how to make money trading options, practical application. The second book is a phenomenal read. This book taught me what it feels like to have an opinion. To have an opinion and believe in yourself, to believe in your own work. You know what? The market is not always right. The market's not always right. That's crazy to say. But you need to be confident in your positions. Trades will work out when they decide to work out, not because you want them to move. Really, really great read. And for those who enjoy reading this stuff, please go out and get it. Check it out. Awesome questions yesterday. I got 2. Well, I got probably 100, but let's point out Jax. He's talking about Bradley. Bradley's long-term member. I really need to thank you big time for your advice today about the expected move and the volatility of an option being in consideration. If I get jittery about a position, this can put me back in the box. I would also like to ask you about ALAB. It is a lockup trade that won't expire until September. The trade that JR shared in ALAB is in July. What gives? And then Dan, same question. So great question. That's why I wanted to cover it today, okay? Lockups. Every single IPO has a 6-month lockup, okay? So you have your IPO, you go public. And this IPO was in ALAB. They offered 19.8 million shares. The shares that were sold by the stockholders, 3.42. And new shares 16.38. IPO price, how much money they were bringing in. Now here's the lockup, guys. Woo! What? So 3 million shares can trade. After 6 months, 16.38 million shares, guys, that originally couldn't be sold can all of a sudden be flooded onto the market. What do you think that's going to do to the stock? So ALAB's IPO, they priced it at 35. Okay? Let's say Goldman Sachs takes them public and prices them for $35. They released 3 million shares. But in 6 months, they're going to come out with another, I don't know, what was that? 17 million shares. These 17 million shares are long from the issue price, right? From 35. What do you think they're going to do if they get to sell these at 95? They're going to sell whatever they can, right? They're going to lock in 300% in 6 months. That's why lockups during the lockup period are just a sale. Sale. Whenever they rally, they are a sale. How do you sell them? Well, we buy puts because it's also a volatility play. But the question is, JR shared options in July, but the lockup is in September. And when you do a lockup trade, you really, really do want to be in the correct month. So, a really great question. ALAB July. Let's look at the ALAB July prices. The 70 puts are trading $6. Okay? $6. So $600 for a one lot, right? It's a lot of money. The September 70s, mid-market, they're trading close to $10. So July allows us to play for 600. SEP makes us pay 1,000 to get into this trade. Now, if the prices weren't so jacked up, you would rather be in July. But I'm just meeting you guys. I'm going to get on live for this because I feel like this is like soft talk. I'm just meeting you guys. I'm sharing a lot of trades. I have a difficult time sharing a one lot trade that costs $1,000 to get in. Now, September, sure. But if we're going to trade this, if we're going to be a little bit more transactional, it's okay to come in those earlier months because ideally what we want to do is build a position, lock in profits, so we will eventually have a lockup trade out in September. But right now, we're just trying to manage money in order to make a little bit so we can finance that longer term trade. Okay? Hopefully that makes sense. What I'm trying to say is just because it's September, we can still express our opinion with a cheaper play into July. The trades that we've done so far, and I'll also throw this out, in order for me to do a trade, okay, whenever I do a trade with you guys, I'm going to get on live, okay? That's just the policy that we have. I am going to share trades live with anybody who's in a program to receive trades. We're also going to cover trades live. So I'm not the most nimble. I can't just transact on a moment's notice. If I want to transact, I get on a video. It takes me a little bit of time. But you guys can transact at a moment's notice. So the trades that we've done so far, 424, 422, 424. I don't have my, I'm not sure the exact dates. So the trades that we've done so far, 422, right here for 450. We bought one for 320, and I sold that for 265 because I wanted to get into a better level. Actually, sorry guys. I will clean this up because I don't want to make a mistake. So let's do this again. Here is our closed one. Yeah, okay. We opened here at 320. We closed at 265. Okay, because what we were looking to do is just get into a better level. Okay, so we still have these. We're in 290. We are in the 55 put at 450. We are down money on this trade. I will stick with ALAB. Okay, we just got in at horrible levels. I think people in the Discord are up money on this trade. Okay, we want to continue selling this because every time it pops, it's going to come off, in my very, very, very strong opinion. ALAB. Okay, let's start talking about active trades that we have. AMN shared March 21st, okay? We did a covered call. Got long at 66. It's trading at 59. But what we do also, we sold the July 80 strike calls for 227. They're trading right now, last mark, 30 cents. We are going to cover this trade, okay? I like staying long stock. We got a buy signal in our high value target tool. For me, the trade that I like is I like covering the 80 short call and then just staying long the stock. You could add another tranche in the stock if you're comfortable doing so. CCL. CCL is a trade that we shared on April 8th. We shared the 17 calls, and we got in the 17 calls for 97 cents. The 17 calls right now are 40 cents. Let's buy to open 17 calls for 40 cents. And this is one of the trades that we shared on MIT Live that we shared free. We are tranching into this trade. Why are we tranching in? Well, we bought the first level at 97 cents. Now we're going to buy a second level at 40 cents. Okay? Now our average cost is going to be 70 cents. Tranching in, managing money. This trade. This trade. Those who have been following along, I think I've covered BHP. That got to be about 5 videos from right now. Why? Because BHP, in my opinion, is broken. That's like a zero sign. It's not a broken sign, but that's my artistic impression of being broken. What do I mean by wow? What do I mean by being broken? As I take a sip of my water, what I mean is copper is so strong. FCX, the leader, is strong. Rio is a trade that we finally did against BHP because the sector kept on rallying. So, hey, let's buy more BHP, but this time we're going to sell some Rio. So, going back April 1st, right back here, you can see how long we've been playing this BHP. And I will trade like this because this is wrong. I want to stand on a mountain and yell that this is absolutely wrong. That's why BHP is rallying. We got in BHP these 62.5 calls. They traded down to about 20 cents, 30 cents. Last trade right now, let me just check my screen because these are cruising. BHP, what do we got? We got some June 60. These are $1.35. They traded up to $1.40. So this went from being crappy trade, this went from being no bueno trade to very, very, very good trade. Here again, buying the stock at 55.20 and Rio selling a vertical call spread. So I'm pretty sure everybody in this trade is going to be really freaking happy. Now, this is going to be a money management type of trade. So why don't we do this? Why don't we, for JR's editors, let's take off one of these June 62.5 calls. If we can take them off for $1.40 or $1.35, that's a nice trade. And let's hold the balance. So BHP, we are long 2 sets of calls, and we also have a divergence trade. That second trade, let's take that off, lock in profits. Let's hold the balance. BHP has a long way to go. Really nice trade, guys. CART. CART. Why am I pulling? I'm just pulling up CART. That's weird. I'm just pulling up CART to remind you to stay long. It's a good position. I really like the trade. It's been a little volatile. Now we got in at 0227. We had the luxury of seeing CART rally. Hey, we didn't have great earnings, but what do we do have? We have big insider buying. I really like staying long CART. I just wanted to bring this on here just to add confidence if you're sitting on that position. This is going to be a little bit longer than usual because today we're going to talk about the expected move. The expected move. The expected move estimates the range within a stock's price that it's expected to move over a specific period. Okay? Math guys out there, give you a little formula. Expected move equals stock price times implied volatility times the standard root, days to expiration over 365. On a chart, it presents nice and simply. This is where the market makers forecast movement. At the edges, there's going to be just natural support and resistance. You could also figure out the expected move by valuing the at-the-money straddle. Okay? The at-the-money straddle is going to be your at-the-money calls plus puts. You can find the expected move in weekly or in monthly. By the way, in our advanced notice tool, it's being built into our bullish or bearish area using the expected move. So this information is all going to be built into our advanced notice tool, and that's going to be in our second update or in our next update. So weekly expected move, it's just a range over the next week, right? If a stock is 100, weekly expected move is 3. Hey, that's just 97 to 03. And when vol's low, you're probably not going to break out of that range. Monthly, market makers might price in between 110 and 90. And again, in my opinion, you need a reason to break out of that range. It doesn't just trade out of the range. You need a reason. You need some oomph. Here's what Microsoft looks like on its weekly. Weekly, again, it's going to be support. It's going to be resistance. Not as strong as the monthly, but nevertheless, a good number to know. How can you use the expected move? Well, awesome support levels, awesome resistance levels. Value the at-the-money straddle. The at-the-money straddle is just your calls and your puts, and that'll get you the expected move. Last topic, and this came up a few times in our class yesterday, and it came up this morning as well. MGNX. MGNX was a stellar trade that we shared April 23rd. Okay, here we go. Here's the trade. 17.5 calls and 15 puts. Okay, we're going to buy them for $1.23 and we're going to buy them for 95 cents. Okay? I want you to think of this as one trade. It's one trade and you're risking $218. Why did we do this trade? This was an earnings trade. MGNX is a big mover, after its earnings. Some names don't move at all after earnings. Oil names, BHP doesn't care about its earnings. BHP is going to move along with copper. It's going to move with the commodity. But MGNX, this sucker, moves a ton on its earnings. So that's why we did the trade. At the time, MGNX was trading about $16. MGNX comes out with their earnings, and during their earnings, they released the results of their last study. And the results of their last study at 181 patients, and 5 of them didn't make it. Okay? That will be the international sign for not making it in the MGNX study. And when 5 people don't make it in the MGNX study, the stock craters, right? Absolutely annihilated. Stock goes down to 367. Okay? So what can we do? So let's go over this example because this is so important. Because think about it. What would you do? What would you do? Stock's trading 3. So the stock's trading 367. Okay? Your long 17.5 calls is long 100 shares from 17.5. These are worthless. These are 0, right? You lost all your money. Sorry, 0. Your 15 puts is short 100 shares of stock now that it's in the money. The stock's at 367. If you buy 100 shares, and that is the direction that I'm giving our traders. Traders who own the 15 puts, buy the stock, buy the underlying stock. Don't touch your options. Don't touch your options. You need your options. You don't need your 17.5s, but you can't sell those. Your 15 puts are short 100 shares, guys. You need those. Don't give those up. But then you buy for 367. Now what happens? Now we make $11.33. 11.33 minus our 218 that we invested is 9.12, and that, my friends, is exactly how you trade MGNX. It surprises me to an extent that many traders in our Discord are long the puts, and there's no market to get out of the puts, which is really frustrating. Don't worry. You don't need the puts. Just go buy the stock. The stock has a 1-cent spread. You can buy it for, $3.60, $4, whatever it is. And everybody, if you're in MGNX, 500% plus winner. I'm a big believer, guys. The creative trader wins. We went for a little bit today, but we still got more to do because right now I'm going to get on with our all access because I have a few doozies of a trade. Thanks for watching. We'll see you guys live on Monday.